then Jim Rogers, author of Street Smarts, Adventures on the Road and in the Markets. He joins us live on Skype from Singapore. Jim, great having you. An opportune time to have you. Thanks so much for taking the time out.
I am delighted to be here, Niraj. Nice to see you again.
Great. Thanks, Jim. So sum it up for us, Jim. Let's just first focus on the equity markets. We move on to gold and the currency as well in a bit. But I read your interview in the Economic Times 4 or 5 days back. You said you're negative India because of a host of reasons. We've corrected a bit today. How much further do you think the Indian equity markets can slide down to?
Well, Niraj, I'm not very good at market timing or short-term trading. You should watch ET now or read the Economic Times. I expect India to have serious problems. Much of the world is going to have serious problems, by the way. But countries like India with a big balance of trade deficit and no way to finance it when money is tight, India, Indonesia, Turkey, I mean, you're not the only one. I'm not picking on you. But your politicians and other politicians have made terrible mistakes. And now we're going to have to pay the price.
Yeah, we certainly are. But, Jim, what you've always been, on spot with, your prophecies for commodities have been great. Now, with gold prices soaring to levels of close to 32,600, what are the commodities that you're currently betting on?
Well, Ivan, I right now, certainly apropos of India, I have started buying some sugar. I'm not sure if I've got my timing right. I'm never very good at it. But I am more bullish on agriculture than most things. Some agricultural prices are very depressed. Sugar, for instance, in the Western market is down over 75% from its all-time high. Especially for India and places that I mentioned, you're going to need to protect yourselves from currency debasement and currency decline. So think of real assets.
So, Jim, we'll come to equities later since we've started the commodity bit. Let's just focus on that for a bit. What about gold? MCX gold, by virtue of what the currency has done as well, is trading at newer highs. I mean, it's gained quite a bit the last few days as well. How much further do you think gold can move up to internationally or possibly in India?
Well, I bought some internationally when it collapsed. When it got to 1,200 US, I bought some just in case. I suspect that there are going to be more future opportunities in the international markets. India's got the situation with your currency, which makes it more and more difficult for you to judge the timing because you have to get the currency and the Western price of gold, right? I'm not buying gold in the West at the moment. I'm just watching, expecting another chance to buy. But, if war breaks out in the next week or month or something, who knows how high India's going to go? And it looks like war might break out.
Yeah. So, okay, Jim, so if indeed there are these Middle Eastern tensions that come out as well, I mean, we've been hearing about that. Crude has been on a bit of a boil as well, at least in India, if not internationally too, it has gone up a bit. If indeed that does happen, do you think prices of both gold and crude do go up in the near term? I'm not asking for a trade out here, mind you. For that, we will watch ET now. But just your basic sense of whether these commodities do move up.
They will absolutely move up. They will certainly move up. They might move up so much that one will have to sell them if they spike up, depending on what kind of war it is and how the war evolves. I mean, if gold or oil goes up to a couple $100 a barrel on the war, then I would probably have to sell it because it would be a spike. And no matter how bad the war is, I don't think it would keep prices that high. Likewise with gold, if it went up a whole lot, I'd have to sell it. But and it could happen. But at the moment, I'm not buying gold or oil in the West. Now, in India, you have a serious problem because of your economy and your currency. You do need to own real assets in India.
Right, and Jim, clearly the currency is in a mess, as you've been maintaining time and again, and now we're getting even scarier levels of close to 66 against the US dollar. It's really not difficult to predict, but what do you think on behalf of the government needs to be done in order to stem this kind of volatility?
Come on, your politicians have been making mistakes for decades, and every time you just push it out into the future, the problems get built up and get worse and worse and worse. If I were the Indian government, and I'm not, and they certainly don't have to listen to me, there are plenty of smart Indians and there are plenty of smart people who could help India. Unfortunately, the government doesn't listen to them. But of all the smart, if I were doing it, I would abolish all exchange controls. I would abolish all capital controls. I would abolish all subsidies. I would abolish the absurd laws governing or restraining agriculture. I would cut spending with a chainsaw. I mean, I would cut spending so that there's no deficit spending, and then I would be assassinated.
That's true, but Jim, the other big story, of course, is the Fed tapering of QE. I mean, that's been the big story of this year globally. You've got markets which are clearly reacting to every little cue that they get. What's your sense on how soon the U.S. Fed will start curbing stimulus and the impact on the global markets thereof?
Well, the U.S. Fed will probably start cutting at least a bit in the next several weeks, because they've gone on so far, and they're causing dissension within the Federal Reserve. There are many people who are saying, wait a minute, this is the wrong thing. So you're going to see some cuts. But Ivan, I would suspect that when they do start cutting and the pain starts and people start suffering, then they don't have any spine, they don't have any brains, then they will loosen up again and keep printing. This is going to end very badly, Ivan, because you have all the major central banks in the world debasing the currency at the same time. This is not good for any of us. You see the problems it's causing in India and Indonesia and other places. Countries which have been living off artificial free money are now going to have to pay the price. We all are, because we've had this huge artificial inflation. We've been floating around on an ocean of artificial money. Now it's going to come to an end, and now we're going to suffer. I think in the end we will wish we hadn't had the artificial sea. We wish we'd bitten the bullet in the first place and taken our pain and made things correct 2 or 3 or 4 years ago.
Yeah, I mean, hindsight is always welcome, Jim. Sadly, it doesn't come so easily. But just a couple of other questions on what you just said. One is, I just want to understand from you how much further damage could happen to the Indian currency. I know it's a difficult question. I know it's not restricted to India alone, but we've depreciated quite a bit in the last 6 months. How much more do you think we can possibly go?
Well, Niraj, you know as well as I do that you have a huge balance of trade deficit, which has been getting worse. Now, your government is blaming all the problems of India on gold. That is so absurd. It's the politicians that have caused these problems. People turn to gold to protect themselves from politicians. But gold is not causing the problem. Until your politicians get it right, I mean, why can't it go down another 50%? You still have this huge balance of trade surplus or deficit, and I don't see anything on the horizon which is going to correct that, other than, unfortunately, a currency which will go down a great deal. As you know, Niraj, things in the financial markets go too high and too low. When they panic, they go too low, and when there's euphoria, they go too high. So I would expect there to be an overreaction. But, Niraj, if you would just get through to your politicians that they say, okay, guys, we've been wrong for 50 years. Why don't we now open up and try something new? Maybe then India could, be restored to its rightful place in the world. India, many times in history, has been one of the most extraordinary countries in the world, because you got all these smart Indians in this great country. If your politicians would just get it right, why can't you be a great country again someday?
Okay. Jim, the other thing that you referred to in one of your earlier answers was to own hard assets in India. Now, would land come under, or property come in that as well? Because now we're starting to see lots of reports which speak about the property bubble coming off, there not being enough real demand. What's your sense?
Well, I haven't been to India in a little while, in several months, but I read that there's a bubble, yes, and you would probably know that better than me. Now, if interest rates are going to go higher, then that's going to hurt people who buy property. And Niraj, if you buy property, agricultural property, or property in areas that have not been subject to the bubble, not every place in India has been under bubble influence. Find the places that have suffered, that have not had a big property influx. Go buy yourself a farm somewhere. I'm extremely optimistic about agriculture. I'm extremely optimistic about mining. There's some parts of the Indian economy that are going to do very well. Go buy yourself some property there. But don't buy yourself in the your property in the financial district, that may suffer for a while. We may suffer for a while, Niraj.
And we certainly are, especially when it comes to the overall equity market sentiment as well. They seem to be bearing the brunt of the weak macros, Jim. It's now levels of 53.40 thereabouts on the Nifty as we speak. And, how much more damage is there in store for the Indian equities, according to you?
Again, I'm a terrible market timer. I'm short emerging markets like Indonesia, India, Turkey. I've shorted these markets because of their currencies, because of the artificial level of the stock markets. I mean, normally in bear markets, stocks and currencies can go down a considerable amount. I mean, you can look it up as easily as I can. 50% decline is not unusual in times of duress. Now, when the Federal Reserve starts withdrawing all this crazy artificial money, we're all going to suffer. But I want to repeat, Yvonne, it may not be this year. They may start withdrawing it this year, but then they're going to panic when they see how much pain it's causing, and then they may loosen up again, and we may have some big rallies again. I just not any good at market timing. I don't plan to cover my shorts until I see, just everybody desperate around the world, including in the U.S., but I'm not any good at this. But I am short at the moment, and I'm not stepping in to cover my shorts.
Jim, before we let you go, I mean, I know you mentioned that you're not good at levels, so I'm not asking you for what levels can the equity market slide down to. But if you're short on the Indian markets, you're short with a reason. You have a view in mind as to when exactly will you come in and cover your shorts.
I will cover in my shorts when I see everybody desperate and throwing shares out the window, whether it's Indonesia or Turkey or India, wherever it happens to be. When I see that panic, then I hope I'm smart enough to step in and start buying. Now, Niraj, you're sitting there. You see that you're closer to the market than I am. You don't see panic yet, I don't think. You don't see desperation yet. You don't see people saying, I am never going to buy shares again as long as I live. I don't care what price, just get me out. When that comes, I don't know when it's going to be. Maybe it's next week, next month, next year. That's when I plan to cover in any market.
Fair call, Jim. Really good having you. Thanks so much for giving us your views and filling us in with what you believe in.
Yeah, Niraj, I'm not sure it is good for you. That you really mean it when you say it's good having me. If I were there, you'd probably shoot me. So I guess it's a good thing I'm sitting in Singapore.
We need you for the next 10, 20 years, Jim. So that is something that we won't do. But thanks for joining.
Thank you, Niraj. See you again. Thank you, Yvonne.
Yeah.